All right. So I'd like to start by saying a few quick words about Pacific Resources. I know many of you are already clients, which we certainly appreciate. But for anyone who may be less familiar with us, we are a national consultant group that specializes in non-medical benefits. So things like disability, leave management, some of the others you see on the left side of your screen, and that really makes us a specialist in those areas. We do mainly partner with larger organizations, as these organizations tend to have more complex needs. And as you can see, we have over 160 active clients, many of whom are Fortune 500 companies. Next slide, please. We held our first meeting with the Connecticut Paid Leave Authority on September 15th of last year, and since that meeting, a few milestones have occurred. So first, employer registration began November of 2020. And second, contributions went live as of January 1st, 2021. For anyone who has impacted employees, the contribution obligation officially began with the employee's first paycheck on or after January 1st. If you've missed taking out deductions, you are permitted to take retroactive deductions during the first 2 quarters of 2021 only in order to catch up on those amounts. The Connecticut program is funded by employee payroll deductions, and the first quarter's worth of contributions will be due on March 31st of this year. We have received numerous questions around contributions, more specifically whether employers may choose to fund the employee portion of the deduction, which is a topic we've asked our representatives from the Paid Leave Authority to touch on more today. We also know that some employers may be considering a private plan, and we're also planning to address a number of items relating to private plans on today's call. As I'm sure everyone knows, Connecticut is one of the many states implementing a paid leave program. More recently, DC, Massachusetts, and Washington have all gone live with programs, and Oregon will be going live in January 2023, which seems like it's far away, but it will definitely be here before we know it. And the Paid Leave Authority, recognizing the value in partnering with some of these state program leaders and really learning from their implementations, have been able to leverage other states' experience when considering how to best structure various aspects of the Connecticut administration. So, all of that being said, we're definitely looking forward to hearing from our speakers, and with that, allow me to introduce them. So today we're pleased to have with us Andrea Barton-Reeves, the CEO of the Paid Leave Authority, and Erin Choquette, the General Counsel of the Department of the Paid Leave Authority. Welcome back to both of you. It's great to have both of you joining us again today. We appreciate your continued partnership with us, and Andrea, I'll turn the presentation over to you. Oh, Andrea, you're on mute.
Okay, I can't see when I'm in presentation mode, so I'll go back and we'll try it again. Stop sharing and reshare. And reshare. Let's see. Go. All right, so I'm hoping everyone can see. I'll go into slideshow mode in just a moment. So can you see and hear me, Amber?
Yes.
Yes.
Okay, great. All right, so let me go back here. And let's go here. All right. So thank you for the opportunity to be here today. We appreciate it. I'm Andrea Barton-Reeves. I am the CEO of Connecticut's Paid Leave Authority, and with me today is my colleague, Erin Choquette, who is our General Counsel. So just a little bit about each of us. Before I came to the Paid Leave Authority, I was the president and CEO at HARC in Hartford, Connecticut, which was a large nonprofit that supported people with intellectual disabilities and their families. Prior to joining HARC, I supported children who were involved with child protection and custody. And in the earlier parts of my career, I actually came right out of college and spent 10 years at Chubb Insurance in New Jersey. I am from New Jersey. I hold a degree in English from Rutgers and a Juris Doctorate, a JD from New York Law School. And with me, as I mentioned today, is my colleague, Erin Choquette. So Erin has more than 14 years of experience working at the Department of Administrative Services, directing that agency's legislative and general legal functions. She is considered the state's preeminent leader and subject matter expert in family and medical leave. She's authored their Family and Medical Leave Entitlements Manual, And even though she has left the Department of Administrative Services to come to the Paid Leave Authority, she still fields an amazing number of calls and inquiries about family and medical leave because she really is considered the state's expert in that space. She's a graduate of the College of the Holy Cross and also of Columbia Law School, where she was a Harlan Fiske Stone Scholar. So today we will talk about the paid leave program, a really brief overview of the laws. We'll speak a bit about the role of the employer and applying for paid leave benefits and the private plans. Right. So our mission at the Paid Leave Authority is to serve a growing need of people who will need paid leave benefits when they need to take time off to care for themselves and their families. We have a twofold mission. One is to make those leaves accessible, and the second is to help employers and administrators and others who will need to navigate the program the help that they need in order to do that accurately and do it well. We have 5 primary responsibilities at the Paid Leave Authority. They include outreach and engagement, which we're doing today, and we really appreciate the chance to do that. We just developed the policies and the procedures to run the program. We established the trust fund contribution rate, which by statute cannot exceed 0.5%. We approve and audit all of the private plans. That process is just open, and Erin will be speaking about that more directly later in the presentation. And finally, we are responsible for administering claims for the program itself. As Ember had mentioned earlier, we do have some key dates that we think are important for you to know. Employer registration did open on November 23rd. We have 42,000 employers who have registered to date, and that number grows each day. Employee deductions from paychecks started on January 1, and through February and March, we are going to be reviewing employer plans for the private plans, and deductions will still continue. The quarterly electronic payments for those deductions are due 30 days after the end of the quarter, and you can see those dates listed there. Starting in December of this year, we hope to be able to accept applications for paid leave benefits, because those benefits should by statute begin by January 1 of 2022, but no later than February 1 of that same year. A brief overview of the employers to whom this law applies. Covered employers include all employers who have 1 or more people working in the state, and that does include nonprofits and private sector employers with unionized workforces. Again, as we mentioned earlier in our previous presentation, sole proprietors and self-employed individuals have the ability to opt into the program, but if they do, they must remain in the program for at least 3 years. Those employer entities that are not covered include the federal government, some employees of the state of Connecticut, municipalities and local regional boards of education, unless their unionized employees make a different decision to be included in the program. But non-public elementary or secondary schools are always excluded and are not covered employers. Very briefly, a covered public employee are those that fall into these categories. Non-unionized employees of the state of Connecticut, so that's mostly our managerial staff. The unionized employees of the state who collectively bargain for inclusion in the program. For those employees of municipalities or local or regional boards of education, if their unionized employees vote to participate in the paid leave program, then the entirety of those workforces are also then eligible and must participate in the program. The 0.5% that's being collected follows this workflow. As you notice on this slide, it does mention that those contributions are post-tax and they are based on the employee's FICA wages. And contributions are capped at the Social Security contribution limit, which right now is about $147,000. When those employee contributions are captured and withheld by the employer, those are remitted to the Paid Leave Authority along with wage information. We then validate that wage information from data that we will receive from the Department of Labor and the Department of Revenue Services. Contributions are deposited into the Paid Leave Trust Fund, which is managed by the Office of the Treasurer, and then those trust fund dollars are then used to pay for benefits in 2022. A brief overview of the leave laws. So we know that there are a number of laws that provide job-protected leave, and come 2022, Connecticut's Paid Leave Act will join as one of those laws that will provide job protection. Job protection will still exist today under Connecticut's current FMLA, Workers' Compensation, the Americans with Disabilities Act, the Pregnancy Disability Act, and what we call SFIPA, which is the Connecticut Fair Employment Practice Act. Workers' compensation obviously will still be a viable option for income replacement during leave, but you may not, as an employee or a recipient of benefits, receive both paid leave benefits and workers' compensation benefits at the same time. A brief overview here of how the law will change when it is fully in effect in 2022. We know now that in Connecticut, the Family Medical Leave Act at the state level applies to employers with 75 more employees, and that it does have an hours worked requirement of 1,000 hours and a time worked requirement of 12 months, with job protection attaching after that 12-month period. It does offer 16 weeks of leave in a 24-month period with extended leave for military caregiver leave, but only 16 of those weeks are paid. And the employer currently can require an employee to exhaust all of their leave to cover their time off under FMLA. This changes considerably come 2022. We know that the threshold of coverage for employers drops from 75 to 1 or more employees. The hours worked requirement is eliminated under the new law, and job protection attaches for employees after 3 months rather than 12. The time off that's available will be 12 weeks in a 12-month period. Again, the same amount of leave available for military caregiver leave, but there will be an additional 2 weeks of leave that will be accessible for those who experience incapacitation during pregnancy. And finally, employers will no longer be able to require an employee to exhaust all of their leave to cover their family medical leave time. They have to allow them to keep up to 2 weeks of their accrued paid time off while they're taking family and medical leave. A brief overview of the lengths of leave. It's up to 12 weeks for job protected leave, 26 weeks for military caregiver. What is unique to Connecticut statute is up to 12 days of leave can be used by a victim of family violence, and an additional 2 weeks of leave available for those experiencing incapacitation during their pregnancy. Those same job protected leave requirements and benefits and lengths of leave are also applicable to the paid leave benefit that people can access through the Paid Leave Authority. A reminder of the reasons for leave: to create or expand your family through birth, adoption, or foster care, to care for a family member with a serious health condition or your own serious health condition, which can include serving as an organ or bone marrow donor, or pregnancy. There is special leave that's available for those who have served in the military, who are injured during active duty, and qualifying exigency leave to see a family member off who's called for overseas duty. And as I just mentioned, there are up to 12 days available for family violence leave in our state. The primary difference, however, for those employers who will be trying to run family medical leave under the state and federal act concurrently will be a change in the definition of family. You may have also noticed that there'll be other changes that will make running state and federal FMLA concurrently more challenging, particularly that there are no hours worked requirements and job protection attaches at 3 months rather than 12. But what another important difference between the two laws that you'll need to know about is that an employee will then be able to take leave for a much larger group of family members and people in their lives that they consider family that is available now under federal FMLA. As you know, federal FMLA that leave is limited to take care of a parent, a spouse, a child who's under 18, or a child who's over 18 that has a disability. There's a much more expansive definition of family under the Connecticut law when it changes in 2022. And that is related by affinity. So this is the new definition, meaning that a person can take leave to take care of any person with whom that employee has a significant personal bond, that is one that's like a family relationship that was listed in the statute: parent, spouse, child, sibling, grandparent, grandchild. That is actually very situation specific. An example that I like to point to frequently is the second bullet from the bottom, where you may have a couple that has been living together, unmarried, significant to one another, are in a long-term relationship. So they maintain what would be known as a familial spouse-like relationship, despite the fact that they have a lack of a legal relationship to one another. Under our current FML, as we know, for state and federal, they would not be able to take time off to care for one another. But when our statute changes in Connecticut, that will in fact be the case. There will be an opportunity for that person to access paid leave and family medical leave in general in order to care for the person that they consider to be their spouse. Along the same vein, for spouses that work for the same employer, the rules for federal FMLA and job sharing and sharing the job protected leave will still remain. So if a person has to take time off to bond with a newborn child or a child that's new to their family through adoption or foster care, or to care for a parent with a serious health condition, spouses will still be required under federal leave, of course, to share that time. Right now, as we sit here today, before the law changes, that same thing is true under state FMLA, to care for a child that is new to your family through birth, adoption, or foster care, or to care for a family member with a serious health condition. But under our new leave law, when it changes next year, those spouses will not be required to share their time for their family leave benefit for any reason. A bit about applying for benefits at the Paid Leave Authority. So an employee will apply to the Paid Leave Authority for their paid leave benefits. And what we will do is to determine their eligibility based on their total earnings from all their employers, keeping in mind that they have to earn $2,325 in the highest quarter of the last 4 of the 5 quarters that they've worked immediately preceding the time that they've applied for leave. We would also verify that the reason that the employee is taking leave is one that's covered by the statute. We then do a preliminary calculation of their benefit amount based on the formula in the statute. Then there is additional communication with the employee and the employer to validate that employee's absences. We don't want employees just disappearing from their workplaces to take leave, and to determine whether or not there's any other type of benefit that they may be accessing at work that would offset the payments from the authority. And once those steps are taken, then the authority will issue its benefits payments. And now I'll turn it over to my colleague, Erin Choquette, who will talk a bit about the private plans.
Thank you, Andrea. So as Andrea described, the public program, the program that the Paid Leave Authority will administer, is based on employee contributions. The statute also allows employers to offer as an alternative a private plan. So instead of having the employees come to the Paid Leave Authority to receive income replacement benefits, the employer could say, nope, I'm going to offer a private plan to my employees. They will come to us. We will administer those claims for paid leave benefits. They have to be approved by the authority to offer this plan. If they receive approval, the employer is permitted to withhold a portion of the employee's wages to fund that private plan. It is permissive but not mandatory. They're not required to do so. If they choose to withhold a portion of the employee's wages, that withholding cannot exceed the amount of the paid leave program's contribution rate. And since they're not going to be part of the paid leave program, the employee will no longer make any contributions to the Paid Leave Authority. So, a private plan under the statute can consist of either an insurance policy. Now that has to be a policy that is submitted by an insurer that's received approval from the Connecticut Insurance Department. Or it can be a self-insured plan. If it's a self-insured plan, the statute does require that the employer post a surety bond in sort of naming the state and the authority as the beneficiary, so that if there's any problem and the self-insured plan is actually unable to fulfill its obligations, the employees are still protected because they can come to the authority for benefits, and the authority is protected because we'll call the bond and receive the protection from the bond. Next slide. The policy that the Board of Directors of the Paid Leave Authority approved last fall details the requirements for these private plans, as well as the procedures that need to be followed. And that policy document can be found on our website if you click on www.ctpaidleave.org and then go to the I want to apply for a private plan tab and scroll down. You'll actually see the full policy document as a link. In general, the most important things to remember are that the policy must offer the same or better benefits as the public plan. It has to provide benefits for the same amount of time, for the same reasons, and at least the same benefit amount. Short-term disability policies, generally speaking, only provide benefits for your own serious health condition, or potentially some offer some bonding coverage, but they don't provide coverage for caregiver or military family or family violence. And therefore, an employer that simply has a short-term or long-term disability policy cannot offer that up as a private plan. They have to get something specific to the paid leave program. As I mentioned, the employer can take contributions from the employee to fund the plan, but it cannot, those contributions cannot cost more than the 0.5%. And if we reduce our contribution rate, they would have to reduce theirs as well. Additionally, that money that can only be used for the plan, it cannot be pooled to fund other benefit programs. It can only be used for this private plan. The plan must also include all of the employees. If you've got a multi-state or multinational, the plan can be limited just to employees working in Connecticut. But the point is, you cannot have a plan that is for your corner suite and then say to your manufacturing employees, we want you to participate in the public plan. It has to be everybody in Connecticut. Additionally, because the legislature felt strongly that the paid leave program is an employee benefit, and since it is funded by employees, they wanted the employees to be able to make the final say as to whether they want to be in the public program with ctpaidleave.org or ctpaidleave, or do they want to use an employer private plan. And so before you can apply to us, you must hold a vote of your employees, and a majority of those employees must approve the plan. Next slide, please. As I mentioned, if you have an insurance policy, you have to get a policy from an insurer that's been approved by the Connecticut Insurance Department. A number of insurance companies have already filed paperwork with the Connecticut Insurance Department to offer products. And that number has actually been growing since the summer, from just a couple in September to over a dozen now. There is one sort of wrinkle that we wanted to focus on for everyone, just so that people understand what we're dealing with these private plans. When we started working on this last spring, we communicated with the insurance community, and the insurance community basically told us, we can't develop a final policy based simply on your statutory obligations and requirements. We need a lot more information, particularly relating to things like the definitions that you're going to be using and certain claims administration requirements. And so knowing that particularly DOL would not be able to promulgate regulations quickly, the Connecticut process takes a long time, and knowing that there would be certain claims administration requirements that the authority had to continue to develop, we took a leaf from Massachusetts, and this is what Massachusetts did in their first year. They allowed employers to apply for private plan approval using a declaration of insurance or a declaration of self-insurance. And then as we worked to develop this additional information, the applications would be supplemented with a final policy document, which would be issued after we issue additional guidances. So right now, we're calling it the interim period. Employers can file their applications based on simply a declaration of insurance as opposed to a full policy. If they've chosen a self-insurance route, we've crafted a template declaration of self-insurance. And then they will apply. If they're approved, they don't have to submit the contributions to the paid leave authority, but it's a provisional approval, and they'll still have to update their application with a final policy document. We're working on that policy document and expect to issue that hopefully by March for public comment so that we can get it finalized this spring. Next slide, please. As I said, once this interim period ends, when we issue that final policy document, insurers must update their declarations to their clients with final insurance policies, and self-insured employers must update their internal plan with the more robust documentation we will require. And they'll have 60 days to do that. They'll have to submit that additional documentation to us, and then they'll move forward. Again, and then for the future, we won't have this interim period anymore. We won't need to worry about declarations anymore. It'll just be sort of straightforward. You just obtain a policy and apply. Next slide. So let's talk a little bit about the application process. The very first thing you need to do is register with us as an employer at ctpaidleave.org. This enables you to create your own account, and it's actually called My Account. When you registered, you'll see that you have a My Account. That lists who you are, how many employees you have, who at your business or corporation is authorized to provide information and represent you. It also is our way of connecting you to your third-party payroll providers if you have them, so we can kind of follow the trail. When you register, we do ask for you to indicate if you have an interest in applying for a private plan. This helps us just target information to those who are interested. You are able to submit an application right now that is functional, but in order to actually complete your application, there's 3 steps you need to do or hold or take before you can apply. First, you have to select a plan. That means making a decision about private versus insurance policy versus self-insured. You have to educate your employees, and you have to hold the vote. Once you've done all of that, you would go back into your account on ctpaidleave.org. You click on your business name, and then you'll see a little tab that says Private Plan, and it'll just take you step by step through the very short process. Next slide. So again, just a little bit more detail about the steps you need to take before you can apply. You either have to work with an insurer, one of the ones who's filed a declaration, or develop a self-insured plan based on the self-insurance declaration document. You can see the self-insurance declaration document on our website if you go to ctpaidleave.org and click on the private plan page. Pursuant to our procedures adopted by the board, we need employees to understand what they're voting on. So we've created a template plain language guide. This can be modified by the employer to adjust to the details of their proposed plan. But the purpose of it is to help employees understand really what they're voting on. What's the benefit of using the private plan versus what's offered under the public program? So we want the employers to provide that plain language guide as well as the declaration document to the employees. We want them to have at least 2 weeks to read and consider that information. Then the employer can hold a vote. It must be anonymous, and as I said earlier, it must be open to all employees working in Connecticut. A majority of all employees working in Connecticut must vote in favor of the plan. In order for it to be a majority, we're going to look at how many employees do you have in Connecticut. It's not a majority of people who voted. In terms of how to hold the vote, we are not specific. We do put parameters in the policy that says it must be accessible, it must not be coercive. Employees must have the freedom to vote as they choose and not because they've got someone standing over their shoulder. If you're a small organization and a paper ballot works for you, that's great. That's not what most people want. We recognize that. And so if they want to use an online voting tool or an app, SurveyMonkey even works. It just has to be something that employees can vote through. We do not require the employers to submit to us the actual ballots, but we do require them to hold on to their documentation in case we need to audit the vote. As I mentioned, if you have a self-insured plan, you need to obtain a surety bond, and that bond must equal the estimated value of a year's worth of contributions of your employees, so that if anything happens, the employees can come into the public program and they're not hurt, and the authority has the funds that we would normally have had if you hadn't offered a private plan. I just want to clarify or be really, really clear about the fact that the surety bond is not used by the employer to pay the benefits. The surety bond is really just the fail-safe to protect the employees and the authority. If you want a self-insured plan, you have to make sure you have the funds available to pay those benefits. You can't tap the surety bond for that. Okay. As I mentioned, the plain language guide is really just to help you explain to your employees, and we have a template. You'll see that as at Exhibit B of our policies and procedures document. It is a template. It is changeable. We want it to be specific to your plan. But the changes have to be accurate and complete and non-coercive. And we will verify that because we're going to ask you to upload your plain language guide with your application for us to review. Okay. And then on the next slide, we just talk a little bit about the vote. A little bit more detail. When you're sharing the plain language guide and when you're telling your employees about the vote, you need to make sure that everyone gets it. So we want you to use the same method of distribution that you would use for other legally required workplace announcements or postings. How do you get information out to your employees through open enrollment? How do you make sure your employees receive the required posting for sexual harassment, for example? Use those same methods because you know that they're efficient and effective. If you have employees who are out on leave, you need to make sure that they get that information too and that they have an opportunity to vote. As I said, the votes must be anonymous and the results must be capable of independent after-the-fact verification. Therefore, getting everybody in the same room and telling everyone to close their eyes and hold up their hands will not work because we can't verify that after the fact. We have made it easy by giving you the language you need to present to the employees. Do you approve the company's private plan to provide the benefits required by the Connecticut Paid Family Medical Leave Insurance Act? Yes or no? We want it to be very clear. I think we've all experienced referenda questions and other questions that you have to, spend 5 minutes with your head in your hands trying to figure out what exactly are they saying. So we don't want that to happen. We just want to be very clear. And so that's the question you have to ask. There is no alteration allowed for that. In terms of the vote, again, it is 50% plus 1 of the total number of employees working in Connecticut have to vote in favor of the plan. And if you go to the website and check out the policy and procedures document, you'll see a complete list so you can check it off before you move forward. Okay. When you apply, as I said, you'll go back into your account. You're going to upload your plan document and the plain language guide. If you've chosen the self-insured plan, you have to upload the bond. You're going to be asked for information about the method you used for the vote and how many employees voted yes, how many employees voted no, and how many didn't vote at all, so that we all know that it's a majority. If it's not a majority, you actually won't be able to move forward. You're going to be required to attest that you complied with the voting procedures. And you will also attest that you understand and will comply with the private plan requirements. And if you have an insurer or third-party administrator, you will direct them to do the same. Some of these requirements relate to the reports that we're going to need employers to give back to us so that we can comply with our statutory reporting requirements. And some of the requirements relate to the claims administration. Okay. So when can we do this? Well, it's available now. You can go to if you've already registered as an employer, you can go to your My Account and you're good to go. We accept these applications on a rolling basis. So, there's no hard and fast deadline by which you have to apply. However, we need to make sure that the plan is approved before the contributions are due. So for Q1 of 2021, your plan must be approved no later than March 31st, 2021, right? Because we need to make sure that you know and we know that you have an approved private plan before the contributions are owed. Next slide, please. So, as I said, during this provisional period, while we have the interim period, we're going to notify you that you have provisional approval. You're still exempt from the obligation to remit the contributions, but we want to be very clear that if you don't update your application with the final policy document within the 60 days of us publishing the final guidance notice, the provisional approval will be revoked. And if that happens, then the employer is going to be responsible for paying up all those contributions that they have not yet submitted. If an employer has been taking contributions from the employees, as they're permitted to do, they can just reallocate those contributions to the authority. If, on the other hand, the employer did not take any contributions and fails to comply with the requirements, then the employer is going to be responsible for those contributions and cannot go to the employees and say, give me a year's worth of contributions. Okay. The plan approval will be for 3 years. It will be rolling, so as soon as we notify you that you're approved for 3 years to that date. If the employer changes its plan, the approval will be revoked. You actually, if you want to change your plan, you need to go through the whole approval process again, because a change in the plan triggers an obligation to do a new employee vote with all the education that's part of it. So just bear that in mind if you're thinking about changing your plan. You need to do so in a way that doesn't leave you without coverage. If you have a self-insured plan, you do have to make sure that the surety bond is updated yearly so that we can be sure that the surety bond covers the appropriate employees. We want to protect against major changes up and down in the employee status. Okay. Grounds for denial or revocation are set forth in the statute as well as in the policy. And they include, if we have evidence that you threatened or coerced the employees in connection with the private plan vote, that would be grounds. Failing to pay the benefits that you're required to. You're supposed to be standing in our shoes, paying the benefits the way we would. So if you fail to do that, or if you have undue delays or other issues where you're not paying the benefits consistent with the requirements, that could be grounds for revocation. Obviously, failing to maintain the surety bond or misusing the funds itself would be an automatic revocation. We cannot allow people to misuse the plan funds. If you fail to report the information we require you to report, or if you provide false information to either us or insurance department, or any other failure to comply with statute, would be grounds for denial or revocation. And again, because we know that many employers will be using insurance companies or third-party administrators, want to make sure that there's no loophole there. So if you direct your insurance company or third-party administrator to do any of those bad acts, that would be grounds too. We are confident that the vast majority of employers just want to do the right thing. So we don't anticipate that there will be widespread malfeasance, but we're lawyers, we need to be prepared. So that's why we want to just be very clear. Thank you. So I think I'll go back to Andrea and she can talk about the additional resources.
So thank you, Erin. We've presented a lot of information today and we understand and appreciate that, but there are other resources that are available that will explain this information not only to you and your colleagues that you can bring back, but are also available for your employees as well. You've heard us make mention of our website repeatedly, ctpaidleave.org. It really is the singular source of information that's most comprehensive on all of that we've discussed, including the details regarding the private plans. For your employees, we have some information that we've highlighted here. which is an employee rights poster, a rack card, which is actually just a smaller version of the larger poster. Some employers have been including the employee paycheck mailer. In December, this was the most downloaded document on our site by far. The employer toolkit, which you can see above the paycheck mailer, is a 24-page document that includes everything that we've discussed today and is very valuable to a number of employers as they're navigating the paid leave program. The employee fact sheet is also another more simplified version of how the program works for your employees that you can download and share through email. And some employers have had their employees returning to work, so they've been offering it in print form as well. And we're here to help you. We do not have a call center. We're essentially a brand new agency, but we do have some support through our Contact Us portal, which you can find on our site. If you do submit your questions there, we do have a team of people who are staffing our Contact Us center and are responding to your questions timely. In addition to that, we do have frequently asked questions. I think we're close to 200 of those now, and videos that are available both in English and Spanish for you and for your employees and your stakeholders and your constituents. Immediately, we're asking employers to do 4 things, and that is to register. Registration is the way that we know that employers are either going to apply for a private plan or that they're aware of their obligation to withhold the 0.5% and remit that to the Paid Leave Authority. If you are still working with a third-party administrator or payroll provider, they should be very well aware of this obligation and already administering it on your behalf. They should be already withholding those wages. If they are not, please let us know that. We've been working with every major payroll provider since last April. So we're going on a year where they've been well aware of their obligations under the statute and their obligation to you. Is to please educate your employees about the withholding information using some of the data and information I just outlined in the previous slide, and that's available on the website. And to please visit the website regularly, where that is the place where we will list our updates and any additional information. In addition, if you do apply for a private plan, going to the My Account feature is where you will be able to track the status of your private plan application, be able to submit additional information, and also just communicate with us generally about how your application is progressing. So it's important to stay on the website regularly for updates. So we want to thank you for your time today. I'm going to stop presenting my screen, and let's see, let me get back here and see if there are any questions that Erin and I can answer.
Thanks, Andre and Erin. I think that was some great information. And we did have a few questions come in already to kick us off. So I think the first is around the concurrency of leave and some of those provisions. And the question specifically is whether other leave types may be running concurrently with the Connecticut paid family leave and be an offset potentially to some of those employer plans. So I think the answer to that question is probably yes, but it also depends on the leave reason and whether or not those leaves may align. So on those lines, could you talk a little bit more about any thought that the committee has given to how the related by affinity provision may be reviewed or validated during the claim process? And I think also if you're able to touch on any thoughts around communications that employers may receive back to know whether they may need to offset some of those benefits from other plans.
Erin, did you want to speak to the affinity, and then I could talk a little bit about the offsets?
Sure. So there are a couple of reasons why a person might be eligible for Connecticut FMLA and not eligible for federal FMLA. One of those is because you can be eligible for Connecticut FMLA so much sooner, after 3 months instead of a year. Then the other is because the definition of family is so much broader under Connecticut. So you could have an employee who says, I need to take leave for my sibling, or in Andrea's example, I need to take leave for my longtime companion with whom I'm not married. So the reason for leave is you'd be taking it only under Connecticut FMLA. If that's the case, then the employee would still have their entire federal FMLA available to them. And assuming that the time away from work taken under the Connecticut FMLA does not bring the employee under the 1,250 hours, the employee could come back later and say, okay, I've been doing all this for my companion or my great aunt or whatever, and now I'm sick, and now I need leave to take care of myself. And that subsequent leave would be drawn under federal FMLA or potentially federal and state if they still have state available. Essentially, what's going to have to happen is that every time an employee takes or requests leave, the employer will have to determine which leave rights are they eligible for, and then determine, just set up their own calendar. So you set up the calendar and say, okay, Erin's eligible for Connecticut FMLA now. She's drawing down on her Connecticut FMLA. She comes back in 6 months with a broken leg. She's going to be eligible for federal and state FMLA. And so she's only got 4 weeks of state left, but she's got her full federal entitlement. So it's going to be an exercise in just making sure you're tracking their leaves and tracking which entitlement they're taking. We do know that the broader definition for family is something that other states are adopting. And so I think what you're going to see is that it will result in people drawing down on their Connecticut leave first. But the vast majority of leaves are still your own health condition and bonding. So the expansion of the family caregiver is going to be an uptick, but it's not an uptick in sort of the big area of taking leaves.
So Amber, I think the second part of that question was about benefits coordination. And this is always a very challenging question because the way in which the benefits are coordinated all depends on the plan that the employer has. So some employer plans require that if there are any state available benefits, that person exhausts those benefits first before they access the employer provided benefits. And so in that instance, that's pretty clear, right? That's sort of the standard that needs to be followed. But that doesn't mean that the paid leave authority is still not going to be in contact with the employer to say what benefits might be available, or whether or not that employer's policy requires that employee to use all or part of their paid time off, their sick leave, their vacation leave, with the exception of the 2 weeks, because they want to avoid what we call stacking. So they want to avoid the person sort of using up their paid time or somehow trying to create some combination of time where they don't access any of their own vacation time, but they're sort of using their other time for other reasons. And we've had a lot of employers that have had that concern about people just sort of laying out, mapping out their leave so that they get the maximum benefit on both sides. While there isn't anything inherently illegal or wrong with that, we hear employers when they say it just doesn't feel right. We don't want people out for months at a time because they figure out a way, to get from one type of leave to another. With that said, though, it's still going to be a challenge. We see stacking less so with current state and federal because they're so closely aligned that they can run more concurrently. But as Erin mentioned, that's going to be more of a challenge because of the vast differences that will exist between the federal and the state statute. So that I know that's not as clear of an answer as most employers would want, but what I would say is that to the extent that your policies need to change so that you can have more alignment between state and federal in a way that doesn't violate anybody's rights under either one of those acts, then employers are free to do that, but they should also do that in concert with the benefits that with the benefits that they're already offering. Some employers have indicated that they may actually change their short-term disability policy in the wake of paid leave. And I don't know if that will be to the benefit or detriment to the company or their employee, and that's every employer's decision. But certainly they have the right to do that, obviously, given that there's appropriate notice and the like, especially if you're working in a private employer environment that has a union, because that's the other issue too. Some of those terms and conditions of employment and those changes, as we know, are bargainable as well.
Mm-hmm. Yeah, that's a great point.
Mm-hmm.
I think quickly we should touch on this one. So we did receive a question about whether the state FMLA is going to be replaced with a paid family leave program. And just to reiterate, no, there will still be two existing plans in place. However, the FMLA program for the state of Connecticut will be undergoing some changes that are effective to align with the go live date of 1/1/22 paid family leave benefit, but there will still be two separate programs in place.
Right. So Amber, to that point, Erin's probably going to have to say the same thing. We really want to make sure that people don't conflate these issues. This is really important. So the family and medical leave law in Connecticut is changing, period, in 2022, which is why we use that chart that outlines what it looks like now as we sit here today and what it will look like in 2022. So that means, you know, without repeating everything, that job protection will attach at 3 months. It will apply to employers with one or more employees. That will be the new family and medical leave law in Connecticut. Then there is an opportunity while you're taking that leave to get access to paid leave benefits. And that is what the paid leave authority is responsible for. But every employer who has one or more employees needs to understand the new law will change and it's applicable to them. And they don't want to confuse that with whether or not that person has access to paid leave benefits, because that is where employers can really get themselves in trouble.
Right, just to add to that, we've been doing in a lot of our trainings focusing on the fact that CTFML is for job protected leave and the Paid Leave Act is for income replacement. And so if you're an employer who wants to have a private plan, you're having a private plan for income replacement, but your employees will still be able to take job protected leave under Connecticut FML. Having a private plan does not excuse you from the obligations of the Connecticut FML statute.
Good point. Excellent point. Another question around how the benefits may interact. So if an employee chooses to file for Connecticut FMLA and then also chooses to use some accrued sort of paid time off during that leave, potentially in lieu of going through Connecticut or the private plan for the PFL paid benefits, will that time still run concurrently? Is that viewed as somewhat of a form of stacking in your eyes? Have you given much thought to how that scenario may play out?
Right. So if you don't come to the Paid Leave Authority, you're not accessing the up to 12 weeks of income replacement that the statute allows. It just stays there in the bank. So as Andrea mentioned, employers have to think about what their policies say about when you have to use accrued time and whether it's required or permitted. If an employer does not require, for example, the employee to use their sick leave, the employee may say, you know what, I'd rather use my sick leave accruals because that's 100%. And I want my 100%. And then if ever in the future, they have another situation where it's covered, they could come to the Paid Leave Authority. They haven't touched their up to 12 weeks per year of those benefits. It does not extend the job protected leave, right? It just is another source of income replacement.
Okay, so different from some states where we've seen the state specifically take a stance on the employee having the right to choose whether to use that time. It's really up to the individual employer in this case to determine how they want to structure their time off policy to run potentially concurrently with the state plan.
That's right. And that's specific statutory language that the employer may permit or can require.
Okay. Great. Let's see. So we have a couple questions about when benefits may begin. I think what we see a lot of times at the end of the year is somebody has some kind of life event and maybe they have a child or they are disabled. In terms of the Connecticut paid benefit, will they be able to start their paid benefits on 1/1 regardless of when they actually incurred that disability or life event, or will they be required to have that life event on or after the start date of the paid benefit in order to receive that?
Well, okay, so I'll start with the easy one that I'm sure Erin will answer a different question. It depends. So for example, with bonding, you can bond with your child for up to a year after birth. So that's a life event that could start before the paid leave benefit would actually be available. And then you would be able to take it. If you are, let's say, for example, planning surgery, then I'm sure there will be people who will begin to submit their application in December. Actually, we're encouraging that. But the surgery would then be in that time period. So there are very limited circumstances under which you would be able to incur the reason, because the law doesn't change until 2022. And that's the other thing too. So even if you had a reason that you think would be applicable, you wouldn't be able to take that leave, right, or get paid for it, I should say, until that, with the exception of the bonding, until the following year.
Right. Just to add to that, you do have to be out of work, right?
Mhm.
So we've had a lot of people say, well, if I have hip replacement surgery in November, can I put in for benefits in January to cover my unpaid time that I took in November? And the answer is no. If you're still out of work in January, you can put in a claim for benefits to receive income during that time in January that you're out of work. So you do have to be out of work, and that's why the bonding is really the big one, because that's the one with that longest window where people know now that they're going to be out. And so we've learned, particularly from Washington, that that we should be prepared for a lot of bonding claims, because people are kind of paying attention and they're planning out kind of how they're going to structure their time off.
Yep, that makes sense. So if I heard you correctly, early submission claims are fine and even encouraged when that window opens. Bonding events that they're still within the year of the date of birth can be taken regardless of whether the date of birth was on or after 1/1/22. And if I have another medical condition and I'm potentially disabled and my date of disability occurred prior to 1/1/22, I could still file a claim if my time out of work is crossing over from 2021 to 2022, but I could only collect benefits from 1/1 forward for that absence.
That's exactly right.
Okay, perfect. We did have a couple questions come in around the private plan. So I know you had mentioned some options for holding the vote, SurveyMonkey, some private surveys. And I think I saw numbers maybe in some committee meeting minutes about having a handful of employers already who have submitted for private plans. Have you seen any methods that worked particularly well or that you would recommend for holding the vote?
We've only had, sorry, go ahead.
We're just receiving the applications now.
Okay.
So don't have that information. Again, it has to enable the employees to be able to vote anonymously. We did get a lot of questions early on about, well, there's only 5 of us. It's going to be really easy to figure it out. It's like, okay, but do your best to make sure your process allows for that. And then we also got the question of, if we run this, our IT person's going to know, like, there's no way to do this without IT being able to figure it out. And it's like, okay, well, that's fine, because presumably your IT person isn't going to be the one who's sort of in a position to coerce your employees. So have a process that is easily accessible, that makes life, we're trying to make life simple for everybody, but really allows employees to vote their conscience and not worry about how the boss is going to feel how they voted.
Mm-hmm. Okay. If an employer has an insured plan that has insured rates that end up being lower than the maximum contribution, if they have any sort of plan savings, are they going to be required to pass those savings along to employees?
That's an interesting question that I've never heard before. There's nothing in the statute that requires them, even under the private plan, to pass along any savings. But clearly the statute is very specific about employers not charging more and the plan not costing more than what the state plan costs. So we're really admonishing employers to make sure that they're tracking those costs very carefully. And it's really the contribution cost, the 1/2 of the 1%, that can't exceed that. And so even if you're either giving your employee the the benefit of your lower administrative costs, or if your administrative costs rise as a result of having the private plan, that is something that you as the employer have to monitor, because you cannot in some circumstances pass that cost on to the employee and exceed their contribution rate if they were also participating in the public plan.
Right.
So that's how I would respond to that.
And just to add to that, you cannot use the contributions for any purpose other than administering your private plan benefit. So if your costs are lower, presumably you could use that money for reserve. Say if it's a self-insured plan, you would use that money for reserve, but you certainly can't ask your employees to contribute 0.5%, get this great deal where it really only costs you the equivalent of 0.4%, and then pocket the difference, because you can't use that money for anything other than to administer the plan and provide those benefits.
Okay, that's some good clarity. That makes sense. Let me take a look here at some of our other questions who came in. So it looks like we have some questions around the registration. Some clients are using a payroll processing systems to help with their filing and reporting. So is that information that they also need to include when they register as an employer with the state?
Well, it depends on your payroll provider. There's one large payroll provider who's indicated that they will register on behalf of the employers that they support, and another has said that they're relying on their individual clients to register themselves. For that latter category, if you're registering yourself, then yes, there should be an indication on the site that says that you're using a third-party administrator. I know that was one change that I think we needed to make, but what we will be looking for is for those contributions to come in some way, shape, or form from you as the employer. So what we're really encouraging employers to do is to make sure that they're having that constant communication with their third-party administrator for either the registration to occur or for the remittances to occur, or both.
So when we say third-party administrator, it's more broad than some of us may be thinking of as just, this vendor assists me with the leave process. It's inclusive of payroll vendors as well.
It's very much inclusive of payroll vendors. It's also inclusive of TEOs, which is a new category of vendor that we've recently become familiar with. And we know that for smaller employers, there are tax accountants, and there's other kinds of folks that are providing support. So we use the broader category of third-party administrator, which is anybody other than someone at your organization who's responsible for the registration, the withholding, and the remittance.
Just to be clear, for the registration function itself, if you are a insurance company or entity that helps with leave management, you do not have to register as a third-party administrator. That registration is for people who are handling the payroll processing, the contributions. If you've got an employee who's filing for a private plan and they're using a third-party administrator for leave processing, they will tell us that in the private plan application.
But if those third-party administrators themselves are employers, we expect them to register, right? Because they then have the same obligation. So many of them have dual roles, right? They're representing and supporting their clients, and they're also employers themselves.
Great. Let's see. So we have a couple questions around pay here. The first one is, if a Connecticut resident works as a contract employee for an out-of-state employer, how will the state employer be informed of their obligation to participate? I believe a lot of this goes back to how the W-2 is handled and whether that's technically an employee under that employer's plan, but any other comments around how that may work?
No, I think you're right. So and the residency requirement often gets confused. if you're a sole proprietor or self-employed person, well, if you're a sole proprietor, then you have a residency requirement. If you live elsewhere and work in the state, then your employer generally has a withholding obligation, and we measure that in several ways, one of which is, does your employer have a payroll tax obligation to the Department of Revenue Services? Do they have an unemployment insurance obligation for you on your behalf through the Department of Labor? Those are really the two critical criteria that we ask employers to use to determine whether or not that person is an employee in the state of Connecticut. And of course, the W-2 is a third indicator. So we ask employers to not rely so much on where the person lives, but more so on where they feel they have their obligations to that employee as an employer, to determine whether or not they have a withholding obligation. Contractors, independent contractors, regardless of where they live, are not considered employees generally, unless you're issuing them a W-2, and they have the option of enrolling in the program on their own. And if they do so, they have to remain in for 3 years. But if you're contracting with someone and they're an independent contractor, that contractor can make their own determination as to whether or not they're going to participate. And you, as the person with whom you're the entity with whom you're in contract with, you don't have an obligation to withhold on their behalf.
Great point. Let's see. So we've got a couple questions around the contributions. And I think a question that we had gotten a lot, which I kind of alluded to in the beginning, is employers who are wanting to fund some of the employee contributions, which I know a lot of the legislation varies by state. We've got some programs where that's allowed, but for Connecticut, the employee must fund the contributions. And if the employer wanted to fund those contributions, it's a little bit of a unique setup that basically results in the employer providing a bonus to the employee that essentially increases their salary and accounts for any other taxation regulations, but would increase that by the amount that they would otherwise be paying those contributions and taxes. So any other thoughts or comments around that item specifically?
No, I think you captured it well. The one caveat or admonition we like to give employers is to make sure that you inform your employees of the fact that there might be a potential tax implication if in fact they're making those contributions on their behalf. For some employees, it may not make a difference at all, and for others, they would very much like to be aware of that possibility.
And I think if that was potentially not an option for the employer, they would be able to fund the benefit if they had a private plan. They could choose to fund those contributions. So that is a potential alternative for them.
Absolutely.
All right, we've got another question around taxation, but on the other end of the spectrum. So will benefits paid by Connecticut be considered taxable income to the employee?
The employee statutorily has two options. They can receive the benefit without taxes withheld, and in those instances, the authority will issue a 1099, or they can have the benefits paid to them with the appropriate taxes withheld, and they can have that and determine what tax liability, if any, they would result from that. So there is an option that's available by statute.
Okay. Okay. Something that's probably more relevant in 2020 and going into 2021 than previously. Any thoughts on potential legislation that would possibly suspend contributions if there is a continued public health crisis or state of emergency, either ongoing or in the future?
There have been a few bills introduced, but there's been no significant movement in that area. We get this question quite often, and we understand why, because we're in the midst of a pandemic and it's a difficult time for a lot of people. But honestly, we hear more from people that really wish that we already had paid leave, and there's a lot of discussion about whether or not if the state had money to just sort of fund it up front, if we could get it stood up and going today, that would be the preference of many, many people. You know, especially those who are working multiple jobs and for whom getting to that 1,000 hours and the, you know, and the 1 year work for an employer for eligibility and that job protection is a really challenging thing to do. It's very challenging for them to be able to do that. The statute has specific timelines, as we know, contributions in year 1 and then benefits availability in year 2. But as we sit here today, there is a very, very strong commitment on the part of the governor and his administration that we move forward as has been indicated in the statute, so that there's no plan for any kind of delay.
Okay, great. So we had several employers questioning some of the notification requirements around deadlines. I think we saw that most prominently when some of the contributions began, and I'm sure your website numbers went up because we accessed that paycheck insert multiple times. So just planning ahead or looking ahead, are there any approaching future deadlines that also carry any kind of notification requirement, or are we looking more so towards the benefit go live date when those may be posted or sent out to employees?
So it's funny because the statute itself says that employers don't have a notification requirement until July of 2022, which is inexplicable to all of us that work at the authority. We don't know why you wait until the middle of the benefit year to tell people that there's a benefit, which is why we figured it was much more important for us to be more proactive and provide those notices as soon as possible and to have as much information and material available for employers as we could. There aren't any that we can think of at the moment. We know that employers really do need to register, and we continue to insist that they do so for 2 reasons. One of which is that when you register, you tell us, that's an indication to us that you're aware of your obligation to withhold. The second is that employers, I don't think, understand, and Erin alluded to it a bit in her part of the presentation, that the failure to withhold does come with a significant cost, and that is that we at the authority statutorily can look to the employer as part of the penalties that we can impose to contribute what you fail to withhold from employees. And the other thing to know is that if you've missed contributions, you are limited in the catch-up period that Erin spoke of earlier to a maximum of 1% of pay. So if you're withholding if your withholding, your failure to withhold, I should say, exceeds that 1% that you can go back and get in that catch-up period, then you as the employer are responsible for paying the rest of that contribution. Because one of the things we will be looking for when someone comes to us at the Paid Leave Authority is whether or not they've made a contribution to the fund. And if the answer is no, because my employer did not register and my employer failed to withhold, that's going to be problematic for that person, and makes for a very awkward conversation between the employer and that employee. And we don't want to have any employer in that position. So that's why we're constantly pushing this message of register, withhold, register, withhold. Even if you think that you're going to have a private plan, you don't know which way that vote is going to go, and you don't want to be responsible for all of those contributions yourself as an employer.
Right.
So the next notice we'll probably issue will be around the time that the remittances will be due, which will be at the end of March with a 30-day grace period to the end of April. And then after that, we will probably be issuing notices around when the claims administration process will open up for the acceptance of claims.
Okay. And I'll just reiterate and say that I think the website is great. It has a lot of useful materials on there, some good collateral to print off and keep handy. And I know you all were previously updating some of those FAQ documents whenever new questions came in, and it looks like they're still continuing to be updated. So as probably some of these questions may find their way on there as well, but there's a lot of great information if you are looking just to peruse what's out there, to visit that website. So I know we've got about 10 minutes left. I will say we've got one question that stuck out as a frequently asked question, and it's around the concurrency of benefits again. So I think maybe it's worth revisiting. I think the question is, how will all the plans interact? So I think in the easiest sense, it's pretty fair to say that, yes, they would all run concurrently. The FMLA federal level, the Connecticut FMLA, and the paid family leave of Connecticut. Those can all run concurrently when all of the provisions align. So if I'm taking a leave for, let's just say, military caregiver leave, I'll file under FMLA, I'll file under Connecticut FMLA, and I would file under paid family leave as well. Where it gets a little tricky is how the person qualifies under each plan. So all of the plans have different eligibility requirements. So in practice, it may not line up as nicely as it does in theory. You may have somebody that qualifies under one plan and not the other, but if they are qualified under all plans, they could run together. How you choose to structure any of your internal policies, as well as language that you as an employer choose to include around how state benefits may interact with other paid benefits, will impact how the benefits can run together. So it is possible that they do not all run concurrently, depending on how you've structured your plan. That's probably the easiest way that I can think of to say it. In a perfect world, yes, they'll run together. That may not always play out in practice. And I know we've also got some employers looking at third-party administrators to manage some either a private plan on their behalf, or even set up more of a monitoring type plan instead, or potentially already handling the Connecticut FMLA. So in those instances, you know, in terms of who the employee is required to report their absence to, you know, whomever is managing that benefit, the actual administrator of the benefit, I think that's where we would expect the employee to file. If you have other ancillary processes set up that may be more of a tracking type mechanism just for your own benefit, you'll need to work with your vendor or whomever to ensure that you've identified a process for that, because that vendor may not be actually responsible for initiating the actual event on behalf of the employee, rather just tracking that portion of their leave event. So I know that wasn't the cleanest answer, but I don't think we can provide 100% definitive answer there. Okay, well, I think that actually takes care of most of our questions. Let me just see if anything else came in here. So let's see. Let's see, we did have a question about posting requirements, and I think we just touched on that one. There's no regulation at this point that says at this time anything needs to be posted around the benefit itself. However, there are a lot of supplemental materials that are available on Connecticut's website that you can provide to employees to support spreading the word about the law and the program. And one other question. So if an employer has a private plan, are there any additional requirements that are forthcoming around the timing for complying with the various reporting or administrative regulations?
We haven't gotten into that level of detail yet with a private plan. Our statutory obligation is to report to the legislature. We've got two different reports, one in July and one in the fall. I can't remember now if it's September or October.
September.
But both of those start in 2022. So we anticipate sort of setting up a cadence to say, we know we need to get this report done in July, so we'll need your claims data, a month prior so that we can compile it. Again, with everything that we're doing, we're trying to be as transparent as possible and to minimize any unnecessary burden or obligation while still maximizing the entitlements to the employees and making sure that everyone understands what's going on. So you can trust us to try to make sure that we won't make your lives any more difficult than is absolutely necessary under the statute.
That sounds good. And we will definitely continue working with you to make sure that we stay updated on when any of the changes or information emerges. But we thank you so much for joining us today. I think this has been really beneficial for everyone. We will look to see if any other questions come in. We don't have any right now, but as with last time, we may reach out just to get those validated, and then we'll certainly share any information back with you. But we look forward to scheduling our next meeting with you in the coming months.
Great.
Thank you so much.
Thank you. We appreciate it.
Thank you so much.
Okay, bye.
Bye-bye.
Thanks everyone for joining. Have a great day.